Hello, everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get going, keep in mind, as always as well, that no one trade is guaranteed to profit. Obviously, there's risk with each and every trade that you take. The flip side of that is there's nice potential profit with each and every trade that you take as well. And that's where strategy and risk management comes in. And we'll be going over some of that today with the technical analysis as a focus. As we move forward, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. And we'll talk about some ways that our web trader platform and our award-winning mobile app, AvaTrade Go, assist with your risk management as well. There's some nice tools that are built into our custom-made app and platform that makes risk management quite a bit easier. So for those that are new, and I know we get a mix of traders, new traders, experienced traders in the webinars. Real quick for the newbies, what is technical analysis? Basically, it's looking at the charts. Specifically, it's candlestick charts that we're using typically, and looking for repetitive patterns, price levels that look important, where maybe there's a price that the movement has trouble breaking above and tends to come shooting back down when it reaches a certain price, or maybe an instrument has a support level where if the movement drops to a certain point, looking at the history of the chart, maybe you see that the price tends to bounce back up unless there's large news to cause unexpected moves. And so those types of price levels or trending patterns, we like to identify as part of our technical analysis. And then that helps you make maybe better decisions in terms of preferred entry points and exit points in and out of trades. Now, we tend to lean on manual methods of technical analysis in the webinars. You also can make use of indicators, which do the technical analysis for you. But I think it's important that you understand the manual methods, so you understand what it is that the indicators are actually looking at when they're telling you whether maybe a market is overbought or oversold at a particular point in time. As we move forward, please, if you have any questions, any input you want to give, please do so at any time in the chat box. You can type your questions or your input. Before we jump on the live charts and look at the technical analysis, we probably should get an idea real quick of what's happening fundamentally in the world in terms of headlines and news. So I just pulled these headlines up a moment ago. World stocks post record highs as bond yields ease. Okay, the fear about bond yields is if they get too high, they become so attractive that there could be a sell-off on the markets as people rush into the high-yielding bonds. The bond yields have eased, meaning dropped down some, and so the stock market then maybe is more attractive. And with some of the numbers that came out yesterday, there was a surge to new highs in many of the markets around the world. There were some positive economic numbers, especially out of the US, that came out yesterday. We have another headline here: 5 signs of a rebounding economy from US CPI numbers. That's what I was alluding to just a moment ago. CPI numbers were very good. That's Consumer Pricing Index numbers. They showed a strong economy out of the US, but not an over-inflationary economy. So the price increase on consumer products went up a healthy amount, which shows good demand. As there's enough demand, retailers then can raise their prices some. And so some increase in price shows a strong economy. Too much increase in price shows hyperinflation. And what this article goes on to say is the amount of increase in the pricing index showed a healthy amount of increase in prices in the US, but not an over-inflationary increase. And so the fears of hyperinflation maybe were calmed, and that's why the markets went rising up as they did. Although gold shot up a bit too, which maybe gives you an opportunity to short gold if you think inflationary fears are dropping. Okay, low inflationary fears means less of a rush into gold then. Gold tends to go up when there's a high fear of inflation. Okay, let's look at maybe something coming up later today. We've got crude oil inventories. This is a big one. If you're trading on oil, that'll occur later today. If the inventories come in lower than expected, then that tends to drive oil prices up, because lower supply means, oh, it's being used up faster, price goes up, typically, in general. And if the crude oil inventories come in higher than expected, that tends to cause fear of oversupply of oil, and the price tends to drop on crude oil in response to an oversupply. So this could have an effect one way or another on oil later today. In general, all the optimism about the economy right now, that tends to drive oil price up. And we'll look at the chart and see what opportunities might be there on crude oil today as well. And then later in the day, this is a big one out of the U.S. Fed Chair Powell will be speaking. He's one of the head guys there in the U.S. for monetary policy. And so trust me, those on the market will be listening to what Mr. Powell has to say out of the U.S. And likely he's going to come out and talk about how robust the economy is doing, but that it still needs propped up with low interest rates and on and on. If he comes out and alludes to the fact that maybe we're getting closer to being able to take away some of the supports on the economy because it's doing so well, that could scare the market. If he alludes to raising interest rates sooner than we thought, or easing the bond buying program that's been supporting the banking system, etc. If he alludes to backing off on some of those supports because the economy is doing so well, then you could see a crash in the market, at least as a knee-jerk reaction to any comments that might be along that nature. So we just don't know what he might say. We know he's going to say something, right? And so you can prepare for that with your technical analysis, and I'll show you how. Real quick, this is our main website, and I alluded to the fact that we have our own trading platform that we've built that has special risk management features, as well as other features that you won't find on the MetaTrader platform. And we also have our own mobile app that has those same features. So for the AvaTrade Go mobile app, you go here, point at trading platforms, go to AvaTrade Go, and you can download from your app store for your mobile device. And it has AvaProtect, which is a protection against loss for defined time periods for a small premium cost. You're welcome to use that on gold, silver, and FX pairings. And if you program the take profit and stop loss, it calculates in your account currency your exposure to your stop loss, your potential profit to your take profit. It also calculates your margin requirement as you're picking your trade size, calculated to your account currency. So a lot of nice risk management features built into the order window before you ever buy or sell. So you're fully informed as to what you're getting into before you make your move. And the same is true if you log in from here at the top right corner of our website. You'll be in the web trader platform, and this platform has those same features in the order window as well as other features. We're talking about technical analysis right now. So if you want technical analysis signals that are done for you on all live accounts, click here, go to Trading Central, and the technical analysis is done in a couple of these features: Forex featured ideas, analyst views. If you click on either of those, you have live signals coming in for cryptocurrencies, for regular currency pairings, etc. And it shows you the price levels like we're talking about in the introduction as we got started. Support and resistance levels are drawn. It shows the direction that the expected breakout move could go, and where you might take profit, where you might enter, etc. So the signals are here for you, and they're time-stamped. They come in through the day, and you even have a description of what indicators were used on many of these signals, along with the price levels. So very nice features on the platform in that regard as well. Real quick, if you were going to place a trade on something that has AvaProtect on it, or any instrument for that matter, you'll see our risk management features, and you'll see AvaProtect on those select items, gold, silver, and FX pairing. So if I then select one of those instruments, click buy or sell, you see AvaProtect. You see the stop loss and take profit features. As you put your take profit price, it tells you how much you'll profit. As you put your stop loss price, it tells you how much you're risking. And you can adjust that with the trade size. It'll adjust the risk and potential profit. And you also can manually enter, obviously, the price that you want. Let's say I think gold will go to 1800 or wherever you think it might go. Enter my price. There's my potential profit with that trade size. Convert it to my account currency. If I'm putting a stop loss, maybe I think it won't drop below 1700. There's my potential risk. Okay, potential profit, potential risk. I can play around with the trade size to get what I'm comfortable with going after in terms of profit and risk. I'm not sure why the sound would be going in and out, Tim, but let me know if the issue continues. Perhaps my plug is not plugged in a good socket. Okay, so we're looking then at another feature. If you didn't want to do a stop loss, maybe you choose to do AvaProtect instead, or in addition to a stop loss. Yeah, AvaTrade Go is in both the Apple App Store, Google Play, the main app stores. You'll find AvaTrade Go. You just have to search for it, or use the link from our website where I showed you. Okay, so if I'm thinking I want, I don't know, 1 day protection, that's a lot less risk than my stop loss was, right? And I can protect for a certain amount of time, and any profits are mine. Any loss during that time period is added back. So that's a nice feature as well with AvaProtect. And you can talk with your account manager for more detailed information on that, or go to our YouTube channel, and we've got all kinds of videos on these features to help you practice with it. Dom, thank you. You're saying the sound is good. So perhaps, Tim, you've got an issue with the sound on your side. Okay, so let's then go to the live charts. Let's take a look at some technicals and see what's going on with the markets. We can see on the 30-minute candles here on the US 100 that we indeed are at all-time highs. We see the movement yesterday after the good numbers out of the US, the indices went flying up. And now it seems that the momentum is kind of stalled, and perhaps we've reached a resistance point. The next support level here on the US 100 is right here. Okay, we can see resistance, breakthrough, and then it formed a bit of support in this area here. Somewhere between this line and this line, we'll find support. Okay, so if you think there's a pullback occurring in the market, you certainly could take a shot on it from a technical standpoint on shorting the market at whatever trade size makes sense for you. Let me get the trade sizes entered. Okay, and then you pick the trade size that's right for your exposure and preferences and such. And why might you short the market? Because it looks like the momentum, technically speaking, has died a bit. You don't have to risk much to get past the all-time high. And your potential profit to the first support area down here is a lot more than what you have to risk. And so it would have to have the momentum to break the all-time high that it reached today in order for you to lose on this with limited risk. And your potential profit, even to the first support level, looks like it's a much larger potential profit compared to risk. Okay, sure. Matthew, you're asking about the RSI. Let's look at the RSI in relation to this movement right now on the 30-minute candles. And so we could go to insert indicators, and we look at, and there are different types you see of indicators. We've got the relative strength index under the oscillators, along with the MACD and momentum indicators, etc. Here's the relative strength index, RSI. So we can add it. It's got standard settings. We can leave it on the standard settings, or if you have preferred settings, you can change it, and you click OK. Okay, now I'm looking at the RSI down here, the relative strength index. And usually when the strength gets up over 70, some would say 80, you see the standard line here goes across at 70, and it was up there just not that long ago. It went above 70, and now it's dipped below. Once it re-enters this zone, many times the belief is that it will then continue down to the lower level, the 30. Okay, and so it's broken above the 70 line. It met resistance, which you can see here, resistance, and now it's re-entered the zone between 70 and 30. So the RSI says it was overbought, and now it dropped down into that zone. There are different views maybe you can have with RSI. You can look through the different features. This is the first one that I pulled up, and it can work just fine for you. And so we can see that this signal from the RSI agrees with the idea that this might be ready to drop to the support level. So if you like to back up your own technical analysis, which we saw the resistance level forming here with your indicator, looks like we're in alignment here, technically speaking, that maybe this is ready to push down a bit before maybe renewing its path upward potentially. But in the short term, it was overbought. It re-entered this zone, which then many times tells you it's ready to push back down. Okay, and that's what we see in the history. It gets to the bottom, it went back to the top. It gets to the top, it went back towards the bottom. It gets to the top, it tested, and down it looks like it's ready to go. Okay, no guarantees, right? But this is the technical analysis on this particular instrument. Okay, and we can also take a look then at some different instruments. Let's look at crude oil. And if we look at crude oil, it looks like it's doing the same thing right now, right? Looks like a bit of a correction. Crude oil went up. If we look at 15-minute candles or 5-minute candles, we see a bit of resistance on crude oil. And I have a support level drawn here from yesterday that this is an area of support that perhaps it could drop towards if it's correcting a bit right now back down. We see this was a breakthrough and became support right here. Okay, and oil is up, it crested to a resistance and seems to be trying to push down. And we see it was overbought up here and has broken into this zone and looks to be angled down, perhaps towards the 30 mark or lower on the RSI. Okay, and if we go to 15-minute candles or 30-minute candles, we see the RSI is up above 70, just dipping below 70 right now. Okay, so again, based on the technicals, it looks like a correction could potentially be starting with the RSI crossing back below 70 and a pullback maybe occurring on crude oil. Okay, so depending if you're interested, that's a move that, according to the technical analysis, makes sense. I don't have to risk much. I can get my stop loss above today's high. I can get my take profit at the first support level here, and my potential profit is larger than what I'm risking. Once again, okay. Let's take a look at gold. Yeah, Michelle, there should be some indicators available in the mobile app as well. Okay, so now we're looking at gold. We saw gold rush up yesterday when the CPI numbers, the Consumer Pricing Index, was higher than expected. And that makes you think, okay, gold's inflationary safe haven. The price increase was larger than expected, so the knee-jerk reaction was buy gold. It's a safe haven against inflation. Prices went up more than expected. That's inflation. Gold went flying up yesterday. Now the realization is, yeah, but it went up a healthy amount. It didn't go up an unhealthy amount in terms of the price increase. It went up a healthy amount. And so you see gold capped itself, at least in the short term, on the 30-minute candles right here. around 1750, just below. So it's ranging between 1741 and 1750. You see 1750, back down to 1741, back up towards 1750, back down, back up towards 1750, back down. So it's waiting to either break above 1750 or break below 1740 or 1741. What kind of pending orders can we use if we want to wait for the breakthrough before we trade? What kind of pending order could we program to sell if the price hits, say, 1740? If it breaks below this support level here, if it breaks out of the range downward, we could sell if the price hits, say, 1739. That would be a sell stop pending order. Pending orders that sell from a lower point are a sell stop. We could say sell from 1739. Could put your stop loss relatively close, back above that little support, 17, let's say 44, risk $5 per ounce maybe. Take profit could be at the next support level down here, 1725. Okay, and so as we set up that pending order, then we can look and see the green line here is the entry. Why would you sell if it hits this price? Because that means it broke out of this range, this little tight range. If it breaks this little support level and goes down to the entry price at 1739, it broke the support then. In that case, there must have been bad news for gold, right? And it very well might do that because the inflationary fears have calmed according to the headlines. So we prepare a sell stop below the nearest support level where it's ranging. If it breaks the support, you're in on a sell. The risk is about 1/3 of the potential profit to the next support level. Okay, that's waiting on the breakthrough move rather than guessing which way it will go. Matthew, you're right. You typed sell stop. I think there's a delay in the time you type and the time I see. But a sell stop is prepared for gold to drop back down to where it was yesterday down here. Okay. But what if the opposite happens? What if inflationary fears come back? Well, then it might break this resistance. In which case, what kind of pending order can we put up there? What kind of pending order would buy if it breaks above this price? Programming to buy from a higher price. Correct? Some of you are already saying it's a buy stop. Buy stop buys from a higher price. And by the way, if you're programming the pending orders on the web trader or on our mobile app, you don't have to tell it what type of pending order. There's just a buy from price, and it makes it the right type, or a sell from price, and it makes it the right type of pending order. So if it's programming a buy from and you enter a price that's higher than the current price, it automatically makes it a buy stop. You don't have to have that technical knowledge. Like on the MT4 platform, you have to enter the type of pending order, which is okay. It doesn't take long to enter it, but it's one step you don't have to do if you use the web trader or our mobile app. Okay, so at price, if I'm buying, it's only if it breaks this resistance in this strategy. So if it breaks above, let's say 1750, if it hits 1752, then it broke that resistance, right? So 1752. And then my stop loss would be back below there, maybe 1747. Back below 1750 for the stop loss. And take profit could be 1790. I know there's a resistance up near 1800. Okay, so that pending order is prepared if it breaks through the resistance on the upside. Okay, we're prepared for a breakthrough either way, and maybe I cheat this down a little. Get a little bit closer. There. If it breaks the resistance, then I'm in, right? And where's my take profit? I better go to the 1 hour or 4 hour candles. 1 day. There's my take profit. It's a little high. Let me pull the take profit down. And I'm before that first resistance level there. You see this is support, support. So you take profit before it has to break that if you're scalping, if you're doing a scalping move. And so that's up around 1761 or so. And it's out of this the view here. Let's go to 1 day, and I'll just cheat that down a little. Now it might be in view in the 4 hour. There's my take profit right here. Okay, and my take profit is quite a bit more than what I'm risking on my stop loss. Okay, and so we've surrounded this small trending movement that we see on the 5-minute candles or 15-minute candles or 30-minute candles. This little trending movement here, or I should say ranging movement. It's ranging between a small high and a small low, ranging up and down. And if it breaks down, we sell. If it breaks through up, we buy, assuming there's momentum. If it breaks through in either direction, that you might be able to ride with. That's a nice technical analysis strategy that works when you have a ranging movement that you're waiting for a breakthrough one way or the other. And honestly, with the headlines today saying that the fear of inflation has dropped after yesterday's numbers out of the U.S., this very well could break the support and push back down towards yesterday's low down here around 1725, which is the anticipation with the sell stop pending order, waiting for that support level maybe to break through. Okay. But in this manner, you're waiting for confirmation rather than selling now because you think gold should drop, which you could if you wanted to. You wait for confirmation of the support level to break first before you sell. Just a different style of trading when you use pending orders compared to market moves, where you're waiting maybe for more confirmation of a move that hasn't happened yet by setting up the pending order. Crude oil we looked at, and it looks like it's trying to drop now our direction to our first support level. We looked at the US 100. It also looks like it's trying to drop our way. Did not break the all-time high that it hit earlier today. Any requests? Now would be a good time. We've got some time. We'll look at maybe 1 or 2 more instruments. Any requests of an instrument you'd like to look at? We could look at, okay, gasoline. I was going to suggest maybe a cryptocurrency. Let's look at gasoline. What would the natural inclination of gasoline be? What direction would it go if there's optimism about the economy? Fundamentally speaking, there's optimism about improving economies. What does that tend to do for demand for oil or for gasoline? Yeah, it would tend to cause it to go up, right? We just looked at gold, Eden. We were looking at gold. We placed some pending orders on gold. Yes, I agree with all of you. And yes, we could take a peek at Bitcoin if you'd like. Maybe a couple other cryptos as we end the session today. So correct, I agree. Good economy tends to drive oil prices and thus gasoline prices up because of increased demand. Same with natural gas and other energies. They tend to go up with improving economy and energy demand. So right now, this movement, the RSI, is in the middle. It did not get overbought yet. Okay, it hasn't for quite some time. It's been below the 70 mark, trying to break above 70. You see, here did not break. Here did not break. Tried again, didn't break. Tried again, didn't break. So it's looking like after a pullback, it could try to break above 70 with the good economic numbers that have come out recently. So what do I see on natural gas? I see a high point here that it reached not that long ago, up around 1.9948. That's a resistance level here at the top of these wicks. So if If natural gas drops to a price you like, whether it's this support level here or a lower support level down here, if you get an opportunistic price that you like, this support, it might make sense to go with the positive economic outlook right now and buy with a take profit just before this high point here, just before this resistance point that these wicks have formed up here. Okay? But you have to like the price that you're buying, right? Right now, it seems the market's in a little bit of a pullback, but I don't think it'll be long-lived with the optimism that we saw out of yesterday's numbers, right? So if you're a more patient trader, you wait. If you're wanting to buy on natural gas, you wait for a price level you like. If you're in a hurry and you don't mind a longer distance to your stop loss and you're looking to buy on this, the fundamentals maybe are on your side right now. But I think the gasoline movement is kind of in between right now in terms of entry price. I think the overall fundamentals are up for gasoline price. That's what the fundamentals are telling me. The technicals are telling me there's a bit of a pullback down right now with the technical analysis, and so you might wait for your price level and then get in when you're ready. Okay. Let's take a look then at natural gas. It's going to look similar, right? Natural gas resistance formed. The optimism on the market drives the commodities up. That's why natural gas is up. If you think the market's pulling back right now, you might wait for a pullback. If you're bullish on natural gas, to buy from a support level if it drops. If it drops to a support level like this, then that might be an opportunistic spot. If you don't think it'll pull back, well, then maybe you're buying from the high point right now. I don't tend to like to do that much. If you believe that it's bound to pull back, you certainly could short natural gas right now because it did not pull back yet. We saw oil pull back. We saw gasoline has pulled back. Natural gas didn't pull back yet. So maybe it's due for a pullback and you short it if that's what you think. In which case, you don't have to have your stop loss very high to get above today's high on these candles. You could put your stop loss just a short distance, short this with a take profit near one of these support levels. This would be your first support level right here because it's an old resistance level here. So if I'm shorting natural gas, I'm putting my stop loss here, and I'm putting my take profit if I'm scalping maybe here, which is just above this first support level. My potential profit is about triple what I'm risking. The technical analysis is on my side with this in terms of risk and potential profit. And maybe the overall trend on the market right now is we saw oil pulling down, we saw gasoline pulling down a little. Maybe natural gas is ready to pull down a little bit as well. And natural gas in general, you know, we're heading out of the winter season. Maybe it's due fundamentally for a pullback also. So that's something to take a look at. But the technicals show you don't have to risk much to get above the high. And the first support level gives you about triple what you have to risk. So it's not a bad setup, technically speaking, the technical analysis on that. So I think this is a good place to stop today. We've been going for good 35, 40 minutes. So I think we'll take a pause here. We've got a general idea here. Optimism on the markets. Equities, commodities are bullish right now. There seems to be a pullback correction going on in the market. So you could short some of these, but you also might be patient to wait for your price if you're bullish on them, but you know they're at highs right now that look like they're pulling back. In terms of gold, it's the opposite. It went rushing up yesterday with inflation fears, and now it seems the inflation fears are calming, and maybe gold is set for a pullback back down. No guarantee, right? So you cover your risk either with AvaProtect or with your stop loss, but it looks like the potential for a pullback is there if the inflationary fears are dying out for the time being. Okay, but keep in mind, in the bigger picture, more stimulus out of the U.S. might revive those inflationary fears in the coming weeks. So as they negotiate more stimulus for infrastructure this time in the U.S. All right, everybody, thank you for joining. Good luck with your trading today. There are some great technical entry points. We've only seen a few here, but there are others. Real quick, I forgot I said we'd look at Bitcoin. If you look at Bitcoin on the 1 month candles, look at that. That is just ridiculous, right? Look at the climb on Bitcoin. I mean, it hit an all-time high week after week after week after week. And look at the rapidity, how rapid that climb was. Maybe due for a correction, no guarantee, but anything that rises that fast eventually is more likely to have a pullback than if it rose more slowly. And so that's a rapid climb. And we can look at some of these other instruments. Ripple, look at the rapid climb it just did. Ethereum, rapid climb. Litecoin, rapid climb. Okay, all these cryptos look the same. So you might wait for pullbacks if you're bullish, or if you think it's time to short some of these, you might do that as well. If we want to look specifically at Bitcoin, 5-minute candles, 30-minute, 1 hour, 4 hour, 1 day. If I'm looking at 1-day candles, here's a support level on the 1 day. Okay, you see this was resistance and now it's above. So if you want to short Bitcoin, the first support level on the 1-day candles is down around 61,400. Okay, that's $2,500 down in the price of Bitcoin from where it is now. So if you feel it's due for a pullback, who was asking that? Lewis. If you feel it's due for a pullback, on the 1-day candles, it's got room to drop before it hits the support level. Okay, that's one thing. Second is on the micro view, like 15-minute candles, it did consolidate. The consolidation we can see on the smaller candles. So we see some resistance formed here and a pullback. So you don't have to risk much. If I was shorting Bitcoin, let's say I took a sell on Bitcoin, okay, I don't have to risk that much. I can put my stop loss here above the all-time high, and my take profit I can put above the 1-day candle support level. This was the line I drew on the 1-day candles. That's the support level. So if this is coming down, I've got about double the potential profit without breaking the 1-day candle support compared to what I'm risking. Okay, potential profit double my risk. My risk is above the all-time high. My double potential profit is before it has to break any type of major support level. So that's not a bad technical setup if you feel like this is due for a bit of a pullback. And in general, if the markets are pulling back, that means the US dollar is strengthening because they're all paired, commodities, everything, they're paired against the USD. So if the USD is strengthening and these other instruments are pulling back, then perhaps Bitcoin could pull back as well, even if temporarily. Okay? But manage your risk here. Cryptos can move a lot in a short period of time. And also there's, in terms of overall volatility, they tend to have more than other instruments. Okay. All right, great. Thanks for joining then. Myself, I'm going to be on vacation for a couple weeks. I actually have a surgery that I'm going to have done. So I'll be out of the office the next 2 weeks. So the live webinars that I do will start up in May upon my return. So next 2 weeks, I won't be doing the webinars, but the registration links are there for the first ones in May when I return. So you're welcome to register for those now. those will be carried out on those dates when I return. There will be other webinars you could look to attend. There's some master webinars that Naeem Aslam does, some other webinars that are available. You can find all of the recordings as well for all of those on our YouTube channel. Okay. All right, everybody. Thank you for joining. Thank you for the good wishes. I'm sure I'll be fine. Fingers crossed. Until then, good luck with your trading, everybody. Yeah, Dom, they're going into my spine. So yeah, hopefully they don't snip the wrong spot. Thank you for those wishes. All right, everybody. Bye for now. Good luck with your trading, and I'll see you in a couple weeks.